Okay, so for this morning, we will continue our discussion about bond valuation. Okay. Now, remember yesterday when I said that if you are given an interest rates are normally quoted on a per annum unless specified in the problem, okay? And of course, this interest is being paid on a periodic basis. Now, what is periodic? It depends on the agreement, whether it be on an annual, semi-annual, or even quarterly basis, okay? So, how will these interest payments, the frequency of interest payments affect the computation of the bond issue price, okay? Let us assume that AEG company issues a 10 million bond and say, for example, this is for 3 years and pays a nominal interest of, say, 6%, okay, and the effective or the market rate is 10%, okay, and interest payment dates would be every June 30 and December 31. So in this case, the interest payments are semi-annual, okay? So how will this affect the computation of the issue price of the bond? Now, we said yesterday that the issue price of the bond is actually the sum of the present value of the principal and the present value of the interest, okay? So if we try to draw a timeline, so this is our timeline, okay? So we said this is per 1, 2, 3, but the interest is semi-annual, so every 6 months. So therefore, how many periods do we now have? 1, 2, 3, 4, 5, 6. So we will be using 6 periods. Okay. Now, since we have doubled the number of periods, then what will be the effect on our interest rate? So we will now divide the interest rates into 2 because it is semi-annual. So therefore, the interest payments will be 3% every 6 months. Okay, so how much will the interest payments be? So if we put here the interest, so every semi-annual, the bond the bond issuer will pay 300,000 to the bond holder or the bond investor. So this is 300,000, 300,000, 300,000, 300,000. Okay, and at maturity, which is on the 3rd year, apart from paying the 300,000 interest, the bond issuer will also have to pay the 10 million principal. Okay, so looking at your timeline, you can see that the 300,000 interests, okay, are essentially the same, and the time periods are also the same, which is every 6 months. So therefore, for us to compute the present value of this, we will make use of the annuity. So we will make use of the present value of annuity. Now, what about for the 10 million pesos? This is just once, and so therefore we will make use of the present value of 1. Okay, so let's do this. So in the payment of the principal, so this is 10 million pesos. We will multiply by the present value factor, and then this one for the interest, this is 300,000. We will multiply by the present value of annuity. Okay, so let us compute for the present value of annuity using our calculator. So again, we will make use of the effective interest rate in discounting all the cash flows. Okay, so divide this by 2, that would be 0.0, that would be 5%. So we'll use 1.05. Divide. Okay, so we will use 6 periods. So 1, 2, 3, 4, 5, 6. So this is now the present value factor for the principal. This is the present value of 1. So that is 0.7462. Okay. So from here we will compute for the present value of annuity. So that's minus 1 divided by 0.05, which is the effective rate of interest. And so that will give us 5.0756. Okay. So therefore, this is 7,462,000. And this one, that's 300,000 times 5.0756. That will be 1,522,680. We add it all. We add the 262. Therefore, the issue price of the bond is 8,984,680. So this is the price by which the issuer will issue the bond, and of course the investor is willing to buy the bonds. Now, what if he will be offered to buy the bonds at 10 million pesos? If I am the investor, I will say no. Why? Because remember, other issuers of bond is offering 10%. So in effect, I am losing how much? I'm losing, that's 1 million as against 600,000, you will be losing 400,000 per annum. Multiply that by the number of years, that's 3 years, that's 1,200,000 lost income or opportunity cost on the part of the bondholder. Okay, so definitely it's a no. Now, this should serve as a guide to the bond investor on the maximum price that he is willing to buy or purchase the bonds being offered to him by the bond issuer. Okay, so this is how the frequency of interest payment will affect the computation of the issue price of the bond. Okay, thank you very much.